You know, trillions of dollars are zipping through the financial markets every single day, and it's all driven by this incredibly complex and often invisible machinery. So today, we're going to pull back the curtain and see how it all really works. Let's jump in. So, have you ever seen this happen? You're watching a stock, right? And the price just lurches up or down. That you look at the volume bar on your chart and nothing. It's barely a blip. It's a really weird feeling, and it makes you ask a huge question. If the trading isn't happening where we can all see it, where is it? That's the mystery we're cracking today. To get to the bottom of this, you've got to understand that trading doesn't all happen in one place. It's more like there are two parallel universes for trading. There's the one we all know that's public and totally visible, and then there's another one that operates completely in the shadows. Okay, first up, you've got what are called lit exchanges. You know these, right? The New York Stock Exchange, NASDAQ, the big names. Think of them like a giant public auction. Every single buy and sell order is laid out in the open, in the order book, for the entire world to see. That transparency, that's the whole basis for how we figure out what a stock is actually worth. And then you have the other world, dark pools. And yeah, the name is pretty spot on. These are private places to trade, usually run by the big banks. And unlike a lit exchange, the order book here is totally hidden. It's not a public auction at all. It's more like a private, backroom deal. So you can really see the fundamental difference here. Lit exchanges are built for transparency. Dark pools are built for privacy. Now you might be asking, why? Why would you need that? Well, think about it. If you're a massive pension fund and you need to sell, say, 10 million shares of a stock, you can't just dump that on the public market. It would set off alarms everywhere and crash the price before you could even finish selling. A dark pool lets you move huge blocks of shares quietly without showing your hand to anyone. So, just how big is this hidden market? Is it a small corner of the financial world? No way. Get this, over 40% of all U.S. stock volume now happens off exchange, a huge chunk of that in these dark pools. This isn't some sideshow. We're talking about nearly half of all trading happening in a massive parallel system just out of our view. And this really gets to the core of why this all matters to you. If that much of the action is invisible, it means the price and the volume you're seeing on your screen, it isn't the whole story, not even close. Understanding where the real money is moving is absolutely critical. Now, we've been talking a lot about stocks, but that's just one part of this whole giant puzzle. There's another market out there that's just enormous, and in many ways, it operates even further from the public spotlight. Right, we're moving beyond stocks and into the world of fixed income. This is the bond market. This is where giant corporations and even entire countries go to borrow truly staggering amounts of money. So what's the real difference? Well, when you buy a stock, you're buying ownership, a tiny slice of a company. But when you buy a bond, you're basically acting as a lender. You become a creditor, and that company or government is legally obligated to pay you back with interest. And notice the trading venue here. Stocks mostly trade on those public exchanges we talked about. But a lot of bonds, they trade over the counter, or OTC. It's less like one big stock market and more like a huge network of dealers all negotiating prices directly with each other. So let's recap. We have lit markets and dark markets. We have different kinds of assets, like stocks and bonds. It's a really fragmented system, isn't it? For all of this to actually work, you need a very special kind of player, right in the middle of it all, acting like the grease that keeps all these gears turning. And that, of course, brings us to the final piece of our puzzle, the market makers. These are the firms that provide the absolute lifeblood of the market, something we call liquidity. So what the heck is a market maker? Put simply, it's a company that is always there, always ready to both buy and sell a stock or any other security. Their entire job is to guarantee that if you want to sell, there's a buyer waiting, and if you want to buy, there's a seller waiting. They create a constant two-sided market. This is a perfect way to picture it. On one side, you have the bids. Those are all the orders from people wanting to buy. On the other side, you have the asks, orders from people wanting to sell. A market maker's job is to have their own orders on both sides of that book all day long, quoting a price they'll buy at and a price they'll sell at. Okay, so how do they actually make money doing this? Well, it's all about capturing what's called the spread. Here's how it works. They might offer to buy a stock at, say, $100, while at the same time offering to sell it at $100.05.
When a seller comes and hits their bid and a buyer comes and takes their offer, they pocket that little 5-cent difference. Now, I know 5 cents sounds like nothing, but when you use high-speed computers to do this millions or even billions of times a day, yeah, it adds up to a very profitable business.
Okay, dark pools, bond markets, high-speed market makers. Let's tie this all together now. Let's look at the big picture of what our modern market actually is. And wow, just look at this. The number of trades flying around every single day has almost tripled in less than a decade. Our markets are faster, they're more electronic, and they're way more spread out than they have ever been before. And this explosion in complexity, it's exactly why these electronic market makers have become so incredibly important. So here is the single most important takeaway. Today's market isn't one place. It's a vast, sprawling ecosystem. It's a network of public exchanges and private dark pools, trading everything under the sun, from stocks to bonds. And at the very center of it all, you have these high-speed electronic market makers, acting like the connective tissue, the nervous system, that holds this incredibly fragmented system together. Which leaves us with one final and pretty fascinating question. In a system this complex, where almost half of all the trading is done in the dark, and prices are being quoted by algorithms in microseconds, who or maybe what is truly in control of setting the price? That's something to think about.